Welcome to this week's ASX strategy session. Not live this week. I'm pre-recording this on Thursday due to the Easter long weekend. So, nonetheless, still lots of interesting things to go through and have a look at. And so we've got the ASX, we've got the gold, uranium, copper, oil, and a couple of stocks for you that I want to have a look at too. So, hopefully, lots of good stuff to have a think about. As always, everything today is general commentary only, doesn't take your personal situation into account. Having said all that, I think we should jump straight into the charts. The ASX 200 up on the screen, and the big development today, well, today being Thursday, is a new all-time high for the ASX 200. It probably really shouldn't come as any great surprise, because the thing with all-time highs are that they tend to lead to more all-time highs, and they're a sign that they really are a sign that money's flowing into the market, and that of course becomes the path of least resistance. The path of least resistance is the ongoing direction of the market, the trend. And this has really been the case all year. So just coming back to the start of the year, and it's really been a case of investors wanting to buy dips. And we talk about this each week. These dips that have come back to the 50-day moving average. Each time they've found support as that buying interest has come in. And I think that's what's really been the underpinnings of the market. And in fact, it's the underpinnings of a healthy market when you get those buying dips. We want to see those dips being bought rather than rallies being sold. And you've only got to go back to, just compress this a little bit, only got to go back to 2002 and then into 2003, and we really saw a lot of instances of rallies being sold. We've got the opposite of that now. We've got the dips being bought. So structurally, that's a very different situation now than what we have had over the last couple of years. It's also interesting to think back to this time last year. So this is a year ago, back in March 2023, and just think back to, like, what were the headlines like then? What was investor sentiment like? And I'm sure you remember everything was pretty much about coming recessions, interest rates, about inflation. And there was pretty much, if you read the newspaper, it was pretty much a crisis on every page you'd turn over. So that was the sentiment around this time last year. And it's quite extraordinary to think how much things have changed to where we are now. And going back to last year, I think a lot of people thought the market was heading back to these lows from the previous year, and potentially even lower. That was the fear. That was the prevailing fear and sentiment in the market this time last year. And now, look, this isn't to say that, I'm not saying, look, things were bad, so we should have expected things to become good. That's not so at all, because bad things can get worse. Of course they can. But the big lesson from this, and I think it's a really important one, it's don't try and position, I think it's best not to try and position your stock portfolio by what you're seeing on the nightly news, what you're seeing in the papers, what you're hearing a lot of commentators talk about, because it doesn't necessarily play out that way, because it's talking about the now. It's not, like, no one's seeing into the future. And this is why I think it's so important that we follow the price action and not those headlines, which often lead us astray. And what was interesting is that, from the low last year, it didn't go straight into smooth sailing from there. There was still plenty of chop and uncertainty in the months that followed, but good opportunities did emerge from this difficult period. I'll show you one example of that. It's interesting stock which you might not have been looking for if you'd been, just getting caught up in the fear of the time. So I've circled the area. This is this time last year. I actually bought this stock myself. It's one of the motion trader stocks. It's still in my portfolio, so I'm still holding it today. But this is what came out of that really uncertain period when a lot of people, I think, were avoiding the market due to the simply due to the negativity that they were seeing at the time. But the thing is, good stocks can still come out of uncertain times, and as I keep saying, follow the price action, not the headlines. This stock's up 160%. Who would have thought that that was possible? If you're reading the papers a year ago, that you're going to find stocks like this. And last week I was talking about some negative divergence. I just quickly put it on. Just going back to the ASX 200, calling up a relative strength indicator, an RSI. I was talking about this negative divergence, like we got this series of higher highs in the market, but the RSI hasn't confirmed it. The thing with divergence, and this is what I pointed out last week, it doesn't always play out. I didn't think this was a sign of the top, rather maybe a cautionary sign that maybe some sort of a pause in the trend was possible. But look, with the new all-time high we're getting now, that pause in the trend isn't currently happening. So I think it's best to just put this divergence to the side. It was something to be aware of. Could back of your mind, but I don't think price action now. It's a new all-time high. Don't want to fight that price action by saying, oh, look, worry about this, worry about that. We've got risk management strategies, we've got trailing stops. The risk management plays in place for should the market turn lower. So I don't like to try and pick highs in markets. I think markets often move on and go a lot further than people anticipate they can go on. So at this point, I think it's a case we've just got to just go. It's a case as it has been all year, and since into late last year, it's been going with the strength. See where it takes us. And just quickly, last week, I was telling you about opportunities outside of the ASX 200. And it's also interesting just to have a quick look at the, so this is ASX 200. I'm going to click to this chart. This is the ASX 200 on an equal weighted basis. So the bigger stock and the smaller stock have the same weighting, as opposed to the ASX 200, which was capitalization weighted. And unlike the ASX 200, when we just compress this, the equal weight is yet to make a new all-time high. But it's but if the rally that we're seeing continues to gain traction, well, then I think we're going to see an increasing volume of money flowing into these small to mid cap stocks within the ASX 200. Just looking at this price action over the last week, we've had the equal weight break above a resistance point. So this is a notable resistance point. It goes all the way back to the pre-COVID high, and just this week we're seeing the equal weight index break above there. Well, it broke above there probably about 2-3 weeks ago, but it's been consolidating above there over the last couple of weeks, and just today we're kicking up to a new high. So it's nearly a 2-year high, highest level since over here in April 2022. So nearly a 2-year high. And if this trend continues, which I think odds favour that it does, it continues to make its way up to potentially a new all-time high. But again, it's that money which will be flowing into those mid areas of the ASX 200, not just those big cap stocks. So I think this is, I think there's a real opportunity here, looking outside the top 10, the top 20 stocks, and so interesting things happening there. Now, if you're getting some value from this, please hit that like button, leave a short comment. Just, hey, thanks for the video. Just tells YouTube you're watching, and YouTube shows other people, and that helps me heaps when YouTube does that. Now, I'm going to move on to the Small Ords, the commodities. I've got lots of things to tell you about there. I've got those 2 stocks for you that I want to show you. But of course, that wraps up the free section. So if you're not a strategy session member, click the link below, just sign up, come across, really cheap, inexpensive to do so. And I think you're going to get a lot of really good ideas. So, okay, now having said that, let's go over to the Small Ords.